Hi, this is ETF.com's Exchange Traded Fridays podcast, a weekly podcast covering developments in the ETF industry. My name is Sumi Roy, and I'm Senior Analyst for ETF.com.
And I'm Jeff Benjamin, Wealth Management Editor at ETF.com. And I also want to remind our audience to go to ETF.com and check out the ETF Leaders tab in Advisor Center, where you can apply to become one of our top advisors or top RIA firms. All the information is there. It doesn't cost you anything. And the deadline is looming. The end of the month is all you have, July 31st. Check it out.
Just a few more days, so definitely check it out on ETF.com. In this week's podcast, we're talking with Andrew Channon, CEO at Procure. Andrew, great to have you with us.
Thrilled to be here.
Let's start by talking a little bit about you and your background and the Procure story. Give us a little intro, if you would.
So my foray into ETFs started way back in 2007 when I started off with an ETF career on the floor of the American Stock Exchange, working for the largest ETF specialist trading firm on the floor at the time, Kellogg Group. And from there, learned about the different sides of trading ETFs, market making, liquidity, capital markets, and really just being told to spend a ton of time digging through fund prospectuses and really understanding how they ticked and how they priced, and some of the real nuance behind the scenes stuff that most people don't tend to look at. And from there, helping to build out an ETF prop trading desk at another firm. There, I was giving a lot of ETF ideas to existing issuers, which would in many cases go on to launch those ETFs, and many of those are out there today. And eventually, one of the principals of one of those firms suggesting, why do you keep on giving us your ideas? Why don't you try launching your own? And that brought me to my first iteration of bringing ETFs to market under my first company, Pure Funds, where we were the sponsor of 10 first-to-market thematic global equity ETFs, and eventually realizing the importance of being able to own and operate your own infrastructure. I joined forces with ETF legend Bob Tull, where we decided to create our own platform where we'd be able to launch our own ETFs moving forward. And so Procure came with the idea of, there's still a lot of thematic ideas that we have. We believe that as technologies come to market and new industries emerge, that there may always be opportunities to bring new first-to-market thematic ETFs out, and that has been an area that we have really focused on. And today we have two first-to-market strategies in our global equity pure play space ETF UFO, as well as our ETF FIXT, which focuses on companies that help before, during, and after natural disasters.
Yeah, those are some really interesting ETFs, Andrew, and I want to get into them. But before we do, I kind of want to, set the background here with regard to space investing, because space investing, it's something that seems to have really taken off over the past few years. And it seems to be something new in the stock market. Why do you think that's the case? Is it because the technology and the costs have gotten to the point where it's easier to send things into the space? Why has it taken off just over the past several years?
There are numerous catalysts, and I'm glad that you brought that up, because when we look to bring out an ETF, not only are we looking to create kind of a first mover product that brings these different themes, industries, or technologies into ETF form for investors to get diversified exposure to, but it's also really believing in the long-term theme itself. And in many cases, it's finding these themes that have potential catalysts along the way. And for space, one of the big driving forces for the incredible pickup in amount of space technologies and companies coming to market has been exactly that, the reduced cost of launch. And that was something that was truly brought forward by SpaceX and their bringing forward of reusable rockets. And they have a goal to take the cost of launching items into space to very affordable price points, which has the ability to open up the market to new players, to companies that want to R&D things in space, to companies that want the benefits of space connectivity for their own business lines, for reaching new customers, for helping various areas of governments companies as well as individuals. And so the ability to access space, which we're seeing, certainly with SpaceX and other launch companies, the cost of accessing has gone down tremendously. And the consistency at which companies are doing launches, I mean, SpaceX is on pace to do, well over a launch per week this year, which several years ago people would have thought was impossible. And so the frequency that we're sending things to space, the lower cost, has really opened up the market for many new types of space technology to now see the light of day. So that has been one major driver. Another has been the almost unanimous agreement that space is the new high ground for military conflict. And look no further than the very beginning of the Russian-Ukrainian conflict. And space was a domain that was focused on heavily, whether it was making satellites inaccessible, whether it was using satellite connectivity to be able to connect people for more secure communications, drone technology, and so many other aspects of modern day warfare are now reliant upon space. So we have these driving forces, and then we have what we're kind of identifying as the space race 2.0, which is forcing countries to either become a leader in their own right or ally with other nations and become, to some respect, reliant upon their space capabilities as well. But it is believed by many space scholars around the world that those companies, those governments, those entities that win the next few decades of space may have an incredible advantage over the next century even. So the need to get things into space, to get them up there now, to push the boundaries, and to do things that your adversaries aren't capable of has become more critical at this point than any time in history.
Yeah, space is it's definitely an interesting area as an investable theme. I think I don't know if there's anything like this out there. Obviously, space has been around for a long time. That's an understatement. But I mean, talk to how are the profits made in space-based businesses, or is this all just this speculation?
So there are numerous different types of companies that are trying to specialize in various areas of the space economy. You have your launch companies that are sending things to space. You have your satellite companies that are manufacturing or operating satellites. You have certain use cases for space that are related to climate change. So things like tracking emissions, watching for erosion and sea level changes, and just the changing of not just temperatures, but what's actually happening on the ground for things like weather. Like if you're trying to fight a fire and you're trying to figure out where that fire might spread, where certain areas may be drier and are at higher risk. Climate change is an area that is certainly reliant upon space to give us real time or predictive information as far as how things are being affected. But if you look at the many different areas that people seem to get so excited about when talking about investing in thematic different areas, and you think of things like AI and big data, you think of drones, you think of cloud computing, you think of 5G and connectivity. And there's a common thread between all of these. And one of those threads is that there's this incredibly large buildup of data. And for each of those industries to work, you're talking about sending data from point A to point B. And this is involved in cryptocurrency and blockchain as well. And so people are really excited about these areas, but few tend to realize the important part that space plays. And so we view space as being kind of the super highway toll operator for this new expansion and massive creation of data, because it has to get from A to B in many of these cases for these technologies to work. And space-based systems and space-related technologies is how that data is being transported. So I think it's really important for people to really understand what space is. But there are also many emerging areas within space, like space tourism, building out of many people are aware that the International Space Station is coming up on its last several years of operation. China already has a replacement for the space station. It's currently in operation. Other countries and companies are going to need to develop these next generation space stations. And here, in the US and with, many of our allies as well, we're focusing on the Artemis missions, which is to return humans to the moon and to actually start building out a permanent presence. And this is something that other nations are looking to do as well. And, we're seeing the importance of getting satellites up there before space and low Earth orbit gets too crowded, building out these very strategic areas of infrastructure on the moon and beyond. And so, the time is now for nations to really plant their flag. And so, we're seeing all different types of spending in areas beyond, from connectivity, from communications to surveillance, military applications, infrastructure, launch, and beyond that are really starting to drive the space economy forward.
Andrew, can you tell us a little bit about your fund, the Space ETF with the ticker symbol UFO? I think it has around $30 million in assets under management today. How is this ETF constructed? What's the strategy?
So when deciding to launch a space-focused fund, for us, it was really important to look at the index, given that this is a passive fund. And so the index was created in conjunction with a former director of research for the Space Foundation. This individual helped build out the model that is currently used today in a very widespread manner for actually determining the size and growth of the space economy. And so, working in conjunction with Vetify and their subsidiary S Network, they were able to build for us a pure play index that focuses on at least 80% of the index is generating a majority of their revenues from space related businesses, activities, and services, while also understanding that there are some very major players in the space industry that aren't necessarily pure play. And in many cases, they're referred to as your primes. So these are your more diversified aerospace and defense names that are still generating hundreds of millions at least a year from space, but it may be less than 50% of their revenue. So there you see some of your companies like Lockheed and Raytheon that have pretty large presence in space, but realizing that we didn't necessarily want an index that was completely reliant or heavily moving solely based on these more diversified, non-pure play names, at least 80% at rebalance of the index is focused on these more pure play names.
What are some of the other names that you'll see, maybe with smaller percentages in the portfolio?
So the smaller weightings, tend to be for the large part some of these more diversified names because they are capped at a maximum of 20%. So while they may be some of the larger market cap names, they actually have a smaller weighting in the fund. But the names towards the some of the higher weightings of the fund tend to be some of these names that are your more pure play ones. So maybe a more household name would be a Rocket Lab, which is a competitor to SpaceX, which is
Hmm.
building their own launch capabilities. A name that's really garnered a lot of interest recently is AST Space Mobile, which has inked several deals with some of the largest cellular companies out there, like AT&T and others, where they're trying to help for continuous connectivity across the US to provide that as a benefit for their existing customers. Other satellite names like Viasat, Globalstar, EchoStar, are other names that kind of help round out some of that top 10 in weighting. And these are names that you're not seeing in a lot of other portfolios. And if you are, they're in many cases at a very small scale. So although there may be some overlap with aerospace and defense, because this index is really looking at heavily focusing on the pure play names, you're not necessarily getting a ton of correlation or overlap with other existing indexes out there.
Do you want to hear more about the best strategies for portfolio management and insights into the world of investing? Make sure to tune into next week's episode of Advisor Upside. Do you think there's the potential for SpaceX to IPO anytime soon, Andrew? And then obviously if that IPOs, I would assume become the largest position in the ETF at some point, right?
So I can't necessarily predict what the weighting would be, but based on the methodology, yeah, I wouldn't be shocked given that it is, probably the largest pure play space name by a significant magnitude. And were they to go public, based on the index rules, it wouldn't be shocking to see it take on, a fairly large position. As far as will they go public? I certainly would love to see more pure play space names such as SpaceX enter the public markets. That said, Elon Musk has, famously at times said things such as, I wouldn't IPO SpaceX until we make it to Mars. That said, he's also teased the idea of potentially spinning out some of his other, projects within SpaceX, like Starlink, which is their own satellite connectivity communications business as well. So, there have been rumors that, that might be a way for the company to, raise some extra capital. That said, they've been pretty successful accessing private markets for capital when they've looked to raise more money. Historically, that said, Starlink has been doing some, tremendous feats across the globe, working with, individuals that are looking for their own satellite connectivity solutions to even governments and militaries, in times of conflict, or just because it's very scalable to utilize Starlink for connectivity.
Who do you think should buy this type of ETF, Andrew? How does it fit into a portfolio?
I think this is something that, could make sense for many different types of investors potentially. So, people that believe in, the long-term growth of the overall industry, those that are looking to get differentiated exposure from what they already have, even a pension fund for some of these larger defense companies, that are looking to maybe get more diversification away from just their own company. This might be something that might make sense to, play the rising tide of the overall industry. But, it's something that, certainly, individuals or entities should, speak with their financial advisors and get an understanding of the fund. But that said, there is, this global diversification aspect of the index and this differentiation from other exposures that you could possibly get, utilizing other ETFs or strategies. So, it was certainly built for in our mind for those that are interested in getting, global diversification to the space industry. And as you mentioned, there's over 30, publicly traded names that are currently in this fund.
Let's talk about another one of your funds, the Procure Disaster Recovery Strategy ETF, ticker symbol FIXT. Andrew, you and I talked about this a few weeks ago when the Hurricane Beryl was making landfall in Texas. It's definitely an interesting strategy. What's the thesis behind this thing?
So, the genesis of the idea came from kind of my own experiences with various natural disasters, including going into my junior year at Tulane University in New Orleans, when Hurricane Katrina came on land in 2005, to starting up my first company that I mentioned, Pure Funds, right when Hurricane Sandy was hitting, the East Coast, and realizing that, natural disasters are a global phenomenon. They've been happening since before humanity and will likely continue beyond our existence on this planet. And there are companies that help us before, during, and after natural disasters. And as far as there being an ETF providing exposure to these companies and really championing these companies that help us at our darkest hours, there wasn't really anything in the market with this type of focus. And, looking at various, ESG funds, more so on the environmental side, you have tons of funds that are focused on low carbon footprint, Paris aligned, carbon credits, renewable energy, nuclear and uranium, and other areas that say, hey, we help fight climate change. The reality is natural disasters aren't going away. And if you look at a chart over time of, the cost associated with damage from natural disasters, these events have become more costly over time. And there's probably numerous factors why that's the case. But we've seen, Allstate just came out with a report a couple of weeks ago showing that, $1 spent on preventative uses, have the ability to, save what could cost, upwards of 12 or so dollars, after a natural disaster. So the idea of, prevention and planning before these events happen is, one strategy that people may use. And you look at insurance companies and how they're leaving states and how their premiums are increasing for coverage. This is something that, these companies are needed regardless of if you're insured or not. When your house is flooded, you need to pump the water out, you need to repaint, you need to get the mold out. When you're a city, you need to rebuild your roads, you need to rebuild your bridges, even things like man-made disasters, such as the Baltimore Bridge collapse. But these all have, massive impacts on logistics, and there's costs associated with those damages that could have wide-reaching fallout. And so we're also seeing that FEMA is, running out of money to be able to help with various areas. So, it kind of goes to that adage, a pound, an ounce of prevention is worth a pound of cure. And, these are real solutions that can be used today, but, sometimes you don't take those precautions in place and you need other companies to help you out during a natural disaster or after a disaster to get your life back to where it was. So this is something that, in my mind is an evergreen theme, one that people have very little exposure to. And quite frankly, I'm shocked that, many people aren't looking at this theme as much as they should, given how relatable this theme is to people's everyday lives.
How do you think investors should be looking at this ETF, Andrew? Is it fair to say it's kind of a hedge against climate change?
So, I don't know if it's necessarily a hedge against climate change. We're not as focused on the climate change aspect. And to be completely clear, this is not an ESG fund. We're not looking for, companies that have extremely high ESG ratings for inclusion. What we're looking for are companies that have contracts with entities like FEMA over the last 5 years or other equivalents in other countries, given that this is a global focused fund. It's companies that help with, backup power generation. So, your backup generator companies and things like that. Companies that help with water treatment and water technology. It's looking at areas, before disasters like construction, consulting, and engineering for your massive building projects that you're doing and making sure that you take these preventative actions into consideration. And then it's even, for the individual level, when a hurricane comes, you're buying plywood. When a hurricane comes through, you're rebuilding your home. And just so companies like a Home Depot or a Lowe's also has a place in a fund like this. So I think that this might be of interest to a lot of people, those that, potentially see the devastation because they've lived through natural disasters. Those that are, maybe not as prepared in, their own personal lives for natural disasters. These are the companies that in many cases, when insurance policies are paying out money for disasters, a lot of money goes to these companies or these types of companies to help get your house back in order. So, even insurance companies, it could potentially be some sort of hedge for them as well, because when they're paying out, again, in many cases, money's making it back to, a lot of these different companies. So to the extent that we think that the government will see the importance, I mean, they certainly talk about the fears and the risks and the costs associated with climate change and natural disasters. To me, that these companies need to be championed, and it's such an incredible industry that so few people have exposure to. But I think, this may make a lot of sense for many different investors for all different purposes.
You definitely have some interesting themes there that you're going after, Andrew. What's next for Procure? What do you guys have on the drawing board right now, or what are you thinking about?
So we have a lot of other ideas in the thematic space. There's certainly other parties that come to us with their ideas, and we evaluate those strategies and potential partnership. For us right now, our main focus is really getting the awareness out there so we can, increase our assets and hopefully, grow our business and bring on some other incredible people to the team to really expand on what we're doing. So, our first goal is to really, increase awareness and drive assets into these funds, which will allow us to do a lot more things in the future, which we're really excited about as well.
Amazing. Andrew, we're going to have to leave it there. It's been an absolute pleasure having you on the show. Thanks so much for your time.
Thanks so much. Happy to come back anytime. Thank you for the interest.
It's Jeff here with ETF.com. Make sure to tune in to the next episode of Exchange Traded Fridays, available wherever you get your podcast.